Kaysen.
Sorry, I
Right.
forgot that I should have
Now you're
recorded
good.
that.
Let's do it. My name's Ryan Kaysen. I'm with Prime Corporate Service, as you can see right that way. For me, my background is in tax and accounting, specifically in real estate. I've been involved in this industry for for 18 years now. Started at the age when I was 20. I'm 38, turn 39 next week. Originally from Southern Louisiana, moved out to Utah to go to school. Started a CPA firm and never left. And so that's kind of it. Have wife, 2 kids that I think the world of, and my passion is real estate investing. I also like oil and gas, and I like taxes. And so a lot of times people who are just starting out in real estate, no matter where you're at, you always got those tax questions, right? So that's kind of what we're going to hit. That's what I'm going to hit on tonight for everybody. Once again, name's Ryan, and yeah, although I sometimes look young, I don't know, the mustache makes me look older, but sometimes I look young. I've been doing this a long time, so excited to be on here tonight and help out anywhere we can. So
Absolutely. I don't know if we're having any technical difficulties. That's why I'm definitely recording this so that way it does it the right way, but it is what it is. I'll allow you to start kind of your presentation, and as I figure some stuff out on the back end of
yeah,
stuff, at least this is recorded and we can always share with everyone else.
for sure. So this presentation is something I actually like to do. It's called "Let Me First Put You in the Water of Real Estate Investing Taxation," but then also let me drown you a little bit too. So not only do I start on that shallow end, we kind of go on the deep end. A lot of times right now, where you see all over the internet, where people are kind of giving you different buzzwords and everything else. For me, I'm not really as big a fan of that. I'm just going to give you like what applies. So if somebody here's made $0, or if you made 1 million, I'm going to make sure I give you at least something to help you, maintain and kind of keep some money to yourself. Because at the end of the day,
Nice.
we're all out there hustling. We're all out there making money. Like for me, I grew up. My first job was 11. I went and worked on a farm in my town in Louisiana. I worked on a cotton and produce farm. Right, that's a lot of hustling. And I don't like. I sometimes feel like real estate's hustling too, and I don't want to go out and do it and give all my money to the government. So we're gonna have a conversation on not only how to do things, but also how to correctly do things. So it's not going to be a lot of fluff. But hey, Harold, one quick thing. You'll want to let me
Yeah.
share screen actually, and I'll take it over from here.
Yes. There we go. Hold on. Let me set you up. There we go.
Cool. I'm a visual person, so I always draw everything out for everybody. I think that's my easiest and best way to do it there. So, um, and I'm also a PowerPoint nerd because that's what accountants always are. So I'm gonna jump. I'm gonna jump into this and just try to help out the community a little bit. Thank you guys for having us. This is an overall guide to real estate investing, just kind of in a short form for you. For
Hmm.
me, whenever I first started and I had my first paycheck, I realized that, hey man, I made all this money and I had all these plans, and I realized that there's this whole, federal income tax, state income tax, Social Security, Medicare. And so we all understand that portion of it because we're prone to. We grow up understanding it. So let's just kind of understand it from a real estate perspective. We always wish our life was real life Monopoly. I was playing Monopoly the other day, mainly because I like any dice game. And I was playing it with a lot of people I went to college with. That was a really bad idea. If you ever guys want to have a horrible game of Monopoly, play with some people who understand finance and accounting. You'll make some really horrible deals. Like you're like, hey man, can I buy that house for like, buying Park Place with weird creative finance options in real estate? Like it does. We got way too serious. But I noticed that in Monopoly, it says income tax, you pay 10% or $200. Like this is everybody's dream. And I want to go ahead and clear this out that if you expect that to be your dream, and you're actually making money, I'm going to probably say, like, I pay a lot more than this in tax. I personally pay taxes, but I also do it strategically and smart. Our goals today are pretty simple. I want to teach you guys. I want to learn. I want to communicate. I want to have fun. I want to make sure nobody feels overwhelmed and they don't cry. So for anybody here, don't feel like you're going to be overwhelmed or cry or anything. You can watch this replay. You can take notes. Although I'm a fast talker, sometimes I sound like somebody the other day said somebody said you sound like you would be a door-to-door tax salesman. And I was like, that doesn't exist, man. Like we don't do that. So that's going to be our goals. One of the things I want to talk to everybody about that everybody has here, right? We all have startup expenses when we're starting a business. A lot of times people like the only way you're going to make money and never have to actually spend money is, guess what? That's what you call a trust fund, baby. Other than that, the rest of us are out there spending our money to make money. Now, the
Absolutely.
IRS, yeah, 100% of the time, right? 100% the IRS is always going to say this one thing. They're going to say, what is your intent? So for me, I'm a big fan. Like, I've had a lot of mentors who've strategically gotten me where I was at in business. And anytime I'm paying someone for consulting, especially in the real estate market, I consider that a write off. Even if you've not made money, even if you're just starting off, that's a normal startup expenditure. So for me, mentorships are a real big thing for me. Like the other day, one of my mentors walked through and I was trying to solve this problem. And he says, here's how you easily solve it. And I was like, that's done. That's easy. Just know that if you're paying someone to teach you, to mentor you, and you're doing it correctly, you can write off that consulting. Now, if you're working with an accountant who doesn't know what they're doing, they'll probably say, we don't want to write it off. If you're working with somebody who knows what they're doing, they will allow you to write that off. So, marketing, do a lot of marketing in the real estate world. We have professional services. We all deal with the lawyers and accountants. Do you know in 2018, this is a side note, in 2018, the IRS came out and said tax preparation is no longer a deduction. That's what they said. So a lot of accountants,
Really?
yeah, yeah. So that's on your personal returns. So a lot of tax accountants have switched over and said, well, we're now professional services. We consult our clients. We also provide services that are legal. And so we roll it under a business as legal and professional services. That's a side note. Travel. If anybody listening to this is a realtor, broker, anything like that, make sure you're deducting your travel. You don't like to drive around all these people who are, I don't know, it's going to sound, it's late at night. All these people stinking up your car late at night, looking at properties. You don't want to drive them around. Write that off. Get you an app. Get you something to track it. If you're driving for dollars in real estate, track it. If you're going and you're looking, like if you're going to, let's say you're going to Chicago to look at properties, deduct it. Like make sure you're deducting it. Travel is one of the easiest things that people don't track. Easiest things. Um, Mills, 5 rules of Mills. It's something easy to learn, right? 5 rules. So I have friends I go to dinner with. And if I talk about business, that's separate from me just going to go hang out with my buddies. There's 5 things you need to know. Number 3 of them are on the receipt. When you have a meal, you need to know the place, your date, your price, and then on the back, you write your purpose and who you're with. That's it. That's how you deduct a meal. If you have a purpose and your intent was business, the IRS allows you to write off that meal. So, internet and phone. Look, we all have it. We all use it. That's how we find deals. We always are on our phone, right? If you're
Absolutely.
doom scrolling on Instagram, that's a little bit different. But if you're sitting over there and you're actually doing deals off your phone, which that's what most people are doing, write it off. Go get you that phone. You don't need to buy, what's that one? Cricket Wireless. You don't need Cricket Wireless. You can write off a brand new iPhone. Like write off your phone bill, write off your home internet. Anything you want me to hit on that slide for you, Harold, or anybody?
You know, it,
What's that? Oh, cool. All right. This is vital. If you guys learn nothing else from me today, this is vital. When you guys are doing real estate, know the difference in your active and your passive income. Active income is your wholesales, your flips, sometimes your short term rentals if you're under 7 days. It is subject to what we call self employment tax. Whenever you're making money in active real estate, you have what they call self employment tax, which is another word for Medicare and Social Security. If you make over $75,000 on an active real estate business, sometimes an S Corp will help you reduce the self employment tax so you can save money if you make over $75,000 consistently. Passive income in real estate is your rentals and your syndications. Here you have no self employment tax. LLCs, I really love passive income because I have no payroll. I can just pay myself at my own leisure. Keep in mind that with both of these, you want to make sure that you are separating them out and not intermingling. I don't want my flips nor my rentals in the same LLC. as final.
Oh, that's good to know.
Yeah,
That's
because if
good
you're
to
going to,
know.
yeah, because you don't want to get hammered on self-employment tax on all of it. Separate it out, save yourself money, be smart.
That's an
Easy.
excellent tip. That's an excellent tip. That's one that I'm gonna have to take advantage of.
There you go. Well, you definitely need to. I mean, that'll save you some money. Um, common deductions and passive, when you're passive. Some things I really say is just make sure the easy things, right? Interest, property tax, your repairs and improvements. Make sure as a real estate investor, you know the difference in your repairs and improvements. Repair is simple. That is bringing something back to a livable state. I grew up in the South, we got a lot of crackheads. As some crackhead comes and busts out your window, right? Like if that crackhead busts out your window and you got to replace it, that's a repair because you can't live without a window. But if you're like, man, I want those triple pane $3 billion windows that they're selling now, and
Yep.
wanting it just to have it, that's an improvement. So know how to qualify those differently. Improvements are for you to make it prettier. Repairs are for you to make it livable. Depreciation is a big one. Every year, believe it or not, as long as I do this multiple times a year, I always have somebody come to me and say, man, my CPA told me not to take depreciation. And I'm always like, what is wrong with y'all? Take it. It's a good expense.
Tell me. I want to start with.
Yeah.
There's an account actually telling somebody not to take depreciation
I've
on
had
their real
multiple.
estate.
I've had it multiple because what they tell them is, well, if you don't depreciate that property when you sell it, you don't have capital gains tax. You know who assumes you got depreciation? The IRS. They're still going to treat it the same, so you might as well take it.
Wow.
That weird? Happens all the time. You would not believe how often that happens, Harold. I'm like, what's the purpose of doing real estate if you ain't depreciating
Exactly. That's
it?
that's the biggest one I'm thinking of.
Yeah. I mean, that's the biggest one. And a lot of times people come in and they're like, hey, man, I made a lot of money this year. And they'll totally forget the depreciated value of their home. They'll totally get that that's appreciating for them. They'll totally forget that that's a thing. And it's always what I like to call a hidden deduction that you
Mhm.
don't realize that's there, but it really, really helps you. So it's awesome. So there's a big catch right now. Whenever you make over 150K, which for you New Yorkers, you East Coasters, really nothing, honestly. But whenever you're making a lot of money over there, over $150,000, sometimes you have passive loss limitations where your losses remains with the property and they don't pass you to you personally. This is sometimes a catch that I always make people aware of. And this is where we're getting into the deeper stuff. There's a fix. Some people here have probably heard about the real estate professional status. This is basically for people who are living, doing, actively participating in real estate at least 750 hours. I like to say 2/3 of your income is coming from real estate, and you have to have assets. If you're going to be a real estate professional status, it's not for you just to go out and flex your chest and take off your shirt and say, look at me, I'm so cool. You're doing this for tax reasons because then you're able to realize your whole loss as you have that status opposed to having limitations. But you have to be doing this. You can't be a doctor usually and then going out and you're saying, hey, I worked 750 hours on real estate too. The IRS will look at that kind of odd.
Yeah.
So there's also a short-term rental loophole that I don't have on here. The short-term rental loophole is if you have a short-term rental, like an Airbnb, that somebody's occupying it 7 days or less on average, you could also qualify for real estate professional status with only 250 hours, but you had to have short-term assets and you have to be the one doing the majority of the management on it. So that's a big loophole that can save high income earners a lot of money.
I hope people, they're gonna probably watch this a few times. So don't mind me. I'm just letting people on Instagram know we're on YouTube Live.
Oh,
So
you're good.
I'm giving them a little tidbit in.
You're good.
And they hear no sound, but I'm showing them kind of some of the stuff you're talking about. They need to join us on YouTube Live right now.
They're like, who is
Join us
this
on
guy?
YouTube.
Yeah,
Yeah,
you're good. I enjoy doing this, and so anytime you want us to come back on and do it, cut more content or anything like that, we're always good to roll. So this is honestly,
absolutely.
this is honestly like tax preparation doesn't excite me. Just doing people's taxes doesn't excite me because when we get somebody's tax paperwork and we're like, it's already done. Like your tax planning is already done. The actual tax education and teaching you what you should do with your business, this is what excites me. Cool.
This is the stuff that I listen. I geek out on a bit. Obviously, I'm not an accountant, so I hire the professionals to do this, such as you guys.
Yeah.
Which I keep trying to tell everybody, and I'm providing, just so everybody knows, I'm gonna put in the details, but thanks to the relationship I have with them, they've given an opportunity where you can get a 60-minute consultation, talk about LLCs, how to set everything up properly, how to do it the right way tax-wise. These are the guys that I work with, you can talk to. So take advantage of it.
Yeah, for sure. And we're doing that. Yes, part with Harold's group and all y'all because we want to help y'all out and we have a great relationship. And so for us, it's just a way to help y'all out and offer benefit. Look, my taxes aren't the same as y'all's, as Harold's, right? Number one, you're in New York and I'm in Utah. Totally different. So somebody's always going to raise their hand and be like, do y'all know how to do taxes in Florida or California? Although we're based in Utah as a background, my firm, we've done over 200,000 returns for real estate investors. Of those 200,000 returns, only about 5% of those have been done in Utah. I can tell you more about New York than I can in my own state. So kind of keep that in mind. So we'll adapt
Nice.
everything to y'all. One of my pet peeves in the tax world is I always have somebody say, "Oh, my friend pays nothing in taxes," and I'm like, who's your friend? Tell me everything, right? Guys, your situation is going to be different from anybody else's. So get that one-on-one consult. It will only help you. Cool. Depreciation 101. The IRS states that a house only could be usable or livable for 27 and a half years. My personal home was built in 1941. That's what we mainly have here in Salt Lake City. And I love the home, but a little bit older than 27 and a half years. Your depreciation is pivotal to know because we're at the end of the year. Your depreciation starts when you place the rental in service, not when you buy it. That means you actually have to have
Okay.
it available for use. And it's calculated your depreciation, yes, basic depreciation. You take the property value, or what we call basis, and you divide it by 27 and a half years. How does it help? It's a tax write-off. It's one of your largest ones in real estate. So if you have an accountant who's out there spinning a sign on the side of the road to get business and tell you you can't do this, leave now. Let's talk a little bit about accelerated depreciation, Harold. This will probably excite you more than most or everybody.
Yes.
This is a big buzzword right now that we're seeing. You see a lot of people say, "Hey man, accelerate your depreciation, it'll help you." So we talked about that. If you have depreciation, there's a way, and you always have to do this. I would not do this unless I have a property, number one, that I'm holding long term, and number two, that's worth at least $500,000, if not more. But on
Okay.
standard, because these studies I'm going to talk about cost money. With the property that you have, the IRS 27 and a half years, you can accelerate your depreciation to be 5 or 7 years. This means you get a better tax write-off up front. This also means that the property depreciates. So keep that in mind. Standard, the IRS assumes you're taking it. You're automatically giving it. When you do accelerated, we do what we call a cost segregation study that will be required. It is required for you to take that accelerated depreciation. You can't just say, "Hey, I'm accelerating my own depreciation." That's not how it works. So you got to make sure you have the study done. A study, you have them, they can range anywhere from $800 to $5,000. The last one I paid for was $4,200, and that was after I negotiated. But for me, it
You
was
got to
worth
everything is a
hey,
negotiation.
everything's I grew up in the South and everything's a negotiation. We barter a lot. My wife is Japanese American, and in Asian culture, you're very much not scared to barter either. It's usually us. Yeah. So, but yeah, with the cost segregation study, they're awesome. The cool thing is, some people are going to get this and they're going to be like, "Oh, I want to do that. I want to do it, but I only have, 17 days or 18 days left in the year." The thing is, you could do a cost segregation study up until the day you file your taxes and still take the retroactive benefit of it. Now, the bad thing is if you ever sell that property, it's depreciated down in value. So if you have if it's accelerated to 5 years, property's worth $0. If you sell it, it is then all that is capital gain for you. So that's why I say it's a property you want to hold long term.
No, exactly.
Yeah, I mean, don't just jump in there on 2-year property and do it. These are both listed on the Schedule E on your tax return. A standard depreciation only gives you the value of the property, whereas accelerated is cool because some of them will even come in. And I had one recently. The one I had done recently They came in and even broke down and put the cost of my light switches.
Oh,
So I
wow.
depreciated my light switches. So the more specific you get, sometimes the better. So I guess take a lot of that. Like if I'm a high income earner well, if I have a lot of real estate earnings this year, and I'm like, man, I want to wipe those out, and I've purchased more properties. Sometimes I'll take that accelerated depreciation to wipe it out. So in 2022, I had a really good year in the real estate market. I bought a property in the last quarter. I did a cost segregation study on it and knocked out most of my tax bill. But I had to
See,
find
this is that powerful stuff that I've been trying to preach to people forever,
yeah.
forever.
I mean, you always you always the easiest way for real estate wealth is to like consistently buy but make the right buys. And a lot of times people don't understand that sometimes the right buy is for tax purposes. Like the property I bought last year and did the cost seg study on, it was a great deal. I loved it. Commercial property, it was awesome. Cash flow it. I'm 39. That thing's going to go down to my kids, right? So
Wow.
for me, it's like I'll go ahead and do my cost seg study, save myself money on taxes, and then I'll go ahead and get that benefit there. So that's what I was doing there. So we started out in the shallow end of what depreciation is. We went to the deep end. Now, some people say, hey, man, I want to do 1031. Ryan, I want to do 1031. They don't even know what it is. So let me explain 1031. I'm going to give you all the pros and cons. You won't hear this anywhere really else. Just so that you know. Pro, you're deferring taxes. Con, you're deferring taxes. This is what I call procrastination. You could be intelligent about it or you could not be. One of the pros is what we call a like kind exchange. So if you have a rental, you got to buy a rental. One of the cons is you got to find a property pretty quick. It's about a 45-day identification period.
Yeah.
A pro of a 1031, hands-off transaction. You don't actually even handle your money. You have to work with what you call a qualified intermediary. If you don't work with one, then you ain't getting anything. A con, if you got leftover money, it's this really weird term that the IRS calls boot. I have no idea why they call it that. I've even tried to research this, but it's called boot. With boot, you pay the excess money you pay capital gains on. A
Wow.
pro with doing one, you're deferring your tax. You have no capital gains because you're deferring. A con is we don't know what the capital gain rates are going to be in the future. Like in 2040, I don't know what it's going to be. A pro of a 1031 is this sounds weird. I hate saying this. Is death. If somebody dies and if someone dies and they have a 1031 exchange going on, then their kids or their inheritors receive the property of that present day value, not when their parent began the 1031. So some of you young bucks out here who are listening, if you're like 25, you're like, man, I'm gonna go out there and do a 1031 and blah blah blah. Like, realize that most of y'all young ones are gonna come out of it, and you're eventually gonna have deferred taxes coming due. But if I'm 60 and 70, and not to be rude, but if I'm a little bit older, I start thinking a little bit differently. How do I leave this with my kids with the less tax impact? Because I have two little boys. We always want to leave our kids with something, but I also
Of
don't want my
course.
kids. I don't want my kids to sit there and be like worried about the taxes on it either. So that's how the rich get richer. Pro, this is a
That they
clean
do.
process. Yeah, they're smart. Turns out those guys with a lot of money are smarter than me. Pros, clean process. Con, you got to meet every requirement. Cool. So that's it with passive, Harold. You want me to cover anything else on it, or we covered a lot there for you?
No, as you know, I want people to be able to have this conversation with somebody like you or the team to kind of deep dive. This is just so they can kind of understand the power of what these deductions and tax planning and preparing it the right way can happen
Yeah.
for you. So I don't
Yeah.
want to give them to go too deep because then we may lose people like what, how, where,
No,
and
so
then but I do want them to give you guys a call, and get this consultation because of the fact that I get a lot of phone calls when I talk to people and the little that I know, and I tell them about it. Like, my accountant never told me this, and I'm like, you might need to find somebody who does this for a living.
man, if you're accountant, I always tell people. So I practice what I preach. I'm always going to do that, right? So for me, I can't sit here and tell y'all the tax benefits of real estate without me investing in real estate. A quick way to size up your accountant is ask them, Hey man, where do you put your money? Easiest way. And if they're going to give you something else to say, hey, this is where I put my money here, I put my money there. I mean, you want to see them put your money where you're going to put your money. So here on active income deductions, I'm going to give you all a little bit here, and then we're going to go over how to schedule a consultation with us on the um. So with the active income, this is when you're doing your flips and wholesales. Keep in mind that if you're ever audited by the IRS, they ask how is an income ordinary, how is an expense ordinary necessary. If you guys are using any expenses that are everybody uses and number two you need to use, then those are going to be deductions for you. I always say like phones, your consulting or your coaching, your lawyers and your CPAs, forming an entity, which I'm going to cover here in a minute, advertising, mileage, meals, dues, subscriptions. If you guys are not a hobbyist, I've never met anybody who's crazy enough to say, man, I'm going to go get into real estate for a hobby. Like, if anybody does that, y'all crazy. Y'all crazy. Y'all log off now. But if you're not a hobbyist, stop treating your business like a hobby, especially real estate. Guess what, y'all? There's vultures out there. These vultures will want to go ahead. They'll circle, they'll circle, they'll circle. They want to get involved in lawsuits. Make sure you're protecting your assets. Get an entity formed. Show the IRS you're a legitimate business and maximize your asset protection. So for everyone here on this call, everyone here who does this, we will do a one-on-one session with you for no cost for an hour to make sure you have this right. So once again,
Oof.
don't be crazy. Don't leave yourself vulnerable. Um, sometimes some of y'all are just entering a boxing ring without ever throwing a punch when it comes to real estate. Don't do that. Make sure you're protecting your assets. Make sure you have the correct entity. I went over active versus passive income. Some people are going to feel overwhelmed by that. You don't need to be. We'll take it off your plate. We'll set up the correct entities for you to delineate it. But at the end of the day, I can tell you a couple things. Number one, I don't want anybody to sue me. And number two, I don't want the IRS to audit me. So when you set up an
Exactly.
LLC, when you set up an LLC or business, that's number one, protecting those assets. You're creating an extra layer. And number two, I could never say that you would avoid an audit, but I can say statistically, you're going to minimize an audit with an LLC or a business set up there.
One of the things I want to mention is so as people hear this, do me a favor. If you're watching this on YouTube right now, hit that like button so people can see more of this. More investors, more people need to understand these things. And the only way it'll be shown and shared, I guess, according to the YouTube algorithm, is that if you like and share it yourself. So please do that. Don't be selfish. Man, what I tell you folks, don't be selfish. Share. Sharing is caring. All right. And I will put the details for this in the video. I'm going to because we had a little technical difficulties in the beginning, I recorded this from the beginning. I'm gonna load it up live. I'm gonna load it up onto YouTube for the full entity of the video so you can see it, and I'll put in the details how to get that 1 hour session.
Yeah, so the 1 hour session, my staff, I personally sit down with my staff here and train them every week to keep them up to date. And the thing is like I want them to provide like for me, you'll notice that I'm not going to come on here and try to pitch y'all or sell y'all anything. The reason why is number one, we want to provide, and Harold want to provide value to everybody. But then number two, I'm going to go ahead and tell y'all, for y'all who are looking at this and you're Googling right now where to go get the entity for the cheapest, you're going to don't do that. It's the same thing. The other day, some guy said, I get my taxes done for $250. I was like, bet you can. Yeah, you can. But can you get them done correctly for $250? Now, the thing is like he was in Iowa, and I was like, I don't know the price of anything in Iowa, but I guarantee it's a little bit cheaper than, New York. But the as an accountant, you know how we make our money? You know the best hustle? You want to guess? You think it's doing taxes, right? That's what people think. The number one way we make our money, the biggest hustle that we do is we call what we billable hours. So if you call me like, hey, Ryan, I got this question and I don't understand it, I go research it. And guess who gets charged an hour for it? You do as a client. The biggest hustle in the CPA world are these billable hours. So I could promise you guys
Sound like a lawyer.
that we're just like a lawyer. So we're basically saying, hey, we'll give you 60 minutes for free. You can come in here and get a personalized plan, and you have no billable hours. I also don't have my staff do billable hours here. So for everybody who comes in and gets their taxes done, we understand that you're a new or seasoned business owner. I'm not going to charge you for that because, in my opinion, if I'm not smart enough to answer the question, I don't deserve your business. And so for us, we don't do those billable hours just because we genuinely feel confident that we can answer questions for you no matter how complicated they are, just based on our areas of expertise. So
I can tell you this, everybody, anybody who's watching anywhere, I appreciate that. Just so you know.
yeah, yeah. I talked to a guy earlier today and he was like, he said, you charge billable hours? I said, nah. He said, I just got billed for $11,000 on billable hours from my last accountant. And I was like, man, that's great. That's crazy. Yeah, I would have a good Christmas with that. My kids would be out there PS5s, anything they need. So
Jeez Louise.
yeah, so that's the ultimate hustle there, really with it. And so what I'll do, I know we have a QR code here that I'm gonna pull up, and I'm gonna put this up here if that's okay with you.
Oh,
And
please do.
just so people can scan it. I know that Zach sent me over that, and Zach's the account manager over here for us, so he's great and everything. But let me grab this for you, and I'll throw this in. Do you have any questions or any questions out there for me that I can answer? I'm more than happy to answer anything for you too. While
You
I
know,
pull this.
I'm looking here now, and for some reason,
Right?
it's it's not coming up, and I think I see the reason why, which is very weird why it's doing that. It's saying that this is private, which it shouldn't be. It
Oh,
should be public. It should be public. But it's showing private for some crazy reason. But I will release it and allow people to answer questions. What I will do, um, let me
yeah,
see if
and
there's
if
some
we,
people who send me some questions.
and I got a lot
Okay.
of content. So anytime anybody wants to chat, I could go
Yeah.
deep, I could go shallow, I could knock them all out. So,
Yeah.
you
So
know,
what we'll do, this is just part one. So everybody, this is just part one. We Ryan and I will do a part two. We'll go a little deeper coming into the new year as we get into the more interesting things. And I'm gonna try to do it before he gets swamped by tax season.
thank you.
But we'll do another session, even if we can't do it live. He and I will do the session. You will have you guys send your questions in. Maybe even have some of you log in on the Zoom, and we'll go into that, and then and continue the sessions. But I would want you to take advantage of what we have now, which is that free session. It's something that I asked for. They're very generous with it. It's a blessing to I think everybody because it helps them help you. So it's
For
a
sure.
win-win for everybody. Excuse
For
me.
sure. And I just wanted y'all to know, I'll get this out and open. When we first started doing those, there was one person in this office who said, hey, let's not do that. I don't like it. And it was me. And then after we started doing them, I love them. I think they're the best thing ever because
Absolutely.
honestly, for me, like if somebody here actually listens to a few things today and it saves you a little bit of money, it saves your time. Because guess what's cool with taxes? You replicate that same thing every year until the day you die, and you're going to
Yep.
still save money. So this 30 minutes could save you a lot of money. I sound like a Geico commercial, but that's
Yep.
really how it works there. And I'm popping up this right here. This is unique for y'all. This is something. This is how we know you get the consult. This is how we know where you're coming from. This is how we know how to help y'all. But on this QR code right here, this is specifically built out for y'all, all y'all listeners here.
Yep.
So I'm going to leave that up so people can scan it. This will always work. It will always be valid. You could use that. You just go in there and scan. You'll see where we have that availability. And then you go in there and then you'll be rocking and rolling with us. And so we make it as easy as we can for you. And at any point, if you guys are like, hey, Ryan, you can always say like, you can say you went over through a presentation with Ryan and, my staff will make sure, well, they're always going to treat you kindly, but they'll make sure to go over everything with you and they'll start, you tell them if you want, you can say, hey, I want to go over my entities. That's where I'd advise to start. We also help people develop corporate credit so they're able to fund their businesses under their business. And we also help people with taxes, of course. I'm very tax heavy because that's my background. But we have a lot of products to provide for business owners because, in my opinion, you could go out and start a business, but nobody's going to teach you. People teach you how to make money, but nobody's going to teach you how to keep it. And that's what we're here to do. So
that is hilarious. And that's the best piece. So again, I'm gonna post this on public YouTube, and I'll send some links within Instagram and stuff so you guys can see this. And I think if you don't take advantage of this, you're out of your mind. You're
agreed.
out of your mind. Out of your mind. Actually, he and I will be having a conversation soon because I got some stuff I got to take care of.
There we go.
So
Hit me
I
up.
will be reaching out, Ryan, just to let
I
you know.
got
So I thank you for your time. I thank you. I appreciate you tremendously. And for everybody who was able to join, again, we had some technical difficulties this time around, but that's why I'm going to repost it. And it is full glory in a few minutes after we get off, and let it upload to YouTube, and then you guys can jump on and log. I will let everybody know when it's live. And listen, thank you, Ryan, again. And everybody,
awesome.
you'll thank Ryan in the comments once this goes on to the regular YouTube, and ask your questions here, and I'll send them to him as well, and I can answer some of
Awesome.
them at the same time.
And we could come back and do a live Q&A with everybody. I'm willing to do whatever y'all
Absolutely.
need. So
Absolutely. Potentially, listen, keep next Wednesday open just in case, because I may
cool.
do that and have everybody come with live Q&A and have some people live on
I'll
the
just go ahead and
Zoom
pencil
with
it
us.
in. I'll go ahead and pencil
Yes.
it in. You know how to get me. So, hey, thank y'all so much. And go ahead and put that QR code. I appreciate you, Harold. Hey, y'all have a great night.
All right, everybody. Have a good one.
All right. Bye now.
Bye-bye. All right. Appreciate you, bro. I stopped the live on YouTube. So
All right, cool. It's still recording for us, I think.
yeah, on this